Okay, good evening, everyone. I think we have just one person online for now while we're recording this video as usual. So tonight we'll be looking at certain patterns we should I might likely see in the market. And these patterns, when we see these patterns, they are likely to repeat themselves. History is likely to repeat when we see these types of pattern. It signifies something in the market. So we'll be taking, although we have a lot of patterns, and I'll be recommending a textbook to us after this, because obviously we can't start treating every pattern in-depthly here. So I can't spoon feed you, actually. So there are certain things you still have to make research on personally on your own. I'll be recommending a textbook after this class. I'll be attaching the link to this class, but you can't, everything I'll be showing you here, you can't get everything in textbook. So it's also good to pay attention to the video. So I would be rushing through the textbook and I'll be sharing my screen shortly. I'll be sharing my screen shortly. One minute, please. Sorry for the delay. Sorry for the delay. Okay, here we go. So this is a textbook, but I did not write this textbook, so please take notes for copyright sake. This is a textbook from Trading Spine. It's an online platform where people learn how to trade as well. I got this from a website, so this is not mine. For the sake of copyright, this is not my book. I just this is the book I use in learning, so, and I use it to teach. And I would recommend the book for anyone who wants to learn on these chart patterns. Okay, I have issues with my Adobe here, so probably I'll just be using MT5 to show the pattern. But I'll still be dropping the link to this book so you get them. So you get it rather for this very book. Okay, so the first pattern we'll be looking at tonight is the symmetrical triangle. So it can be in two ways. It can be bullish or bearish. It's just a triangle, just like it's called. It's just a triangle. But let me see if I can get something from our shapes. Okay, so I just have to draw this. And I'll be very fast because we have a lot to cover. So I'll be dropping the link to the textbook for those who want to study more on it. But this is really not something hard to know. It's really not hard to know. There are more complex shapes we'll be looking at. Obviously, we can't get there today, but with time we would. So what does this triangle signify in the market? It depends. I told you it comes in two forms. You can have the bullish symmetrical triangle and the bearish symmetrical triangle. Why it's symmetrical is that each of the sides are equal, kind of. Each of the sides are equal. They make almost equal degrees to the horizontal. They make almost equal degrees to the horizontal. So when you have it in this form, when you have it in this form coming from the upside, Can I get an arrow for this? Arrow down, yeah. You have the market coming this way. Okay. You have the market coming this way from the upside. Maybe I should just put this here. And then it starts forming a pattern like this. Starts forming a pattern like this. Like this. So I could not load the PDF. It would have been faster that way. So when you see a market coming from the upside and down, and it now starts respecting kind of this support. It starts respecting the support level, and as well respecting a resistance level above, and forming this type of pattern. We call it a symmetrical triangle. We also have a similar shape like this as it's called a pennant, but a pennant is smaller compared to a symmetrical triangle. I would show us what a pennant means. A pennant is shorter compared to a symmetrical triangle. So when you have the market coming from the downside and starts ranging, we have, okay, when we talk about patterns, we can have two types of patterns. We can have two types of patterns. The first can be, the first is the continuation pattern, and the second being the reversal pattern. Two types of pattern. Let me see if I can write this somewhere. Two types of pattern. Two types of pattern. First being continuation pattern. And number two is reversal pattern. Can have continuation pattern and reversal pattern. So for this very symmetrical triangle, it forms a reversal pattern. It forms a continuation pattern rather, pardon. Continuation. So this is a continuation pattern. What do I mean by a continuation pattern? It's coming from the upside. It ranges for a while and continues in that direction. If it were to be a reversal pattern, it would come, form this pattern, form this range kind of, and then reverse back to the upside. But since it's a continuation pattern, it forms this pattern and then reverses down, and then continues downward rather. So now we would most likely have something like this, a break out of that resistance line, a retest. If I were to be using TradingView, this would have been better, but I want us to be familiar with MT5. This is MT5 on the system. I want us to be familiar with MT5. That's why I'm using MT5 tonight. If I were to be using TradingView, this would have been faster, but I want us to be familiar with the tools on MT5. So this is a continuation pattern coming from the upside, ranges for a while. What does this ranging mean? It's practical. Like, it's coming for a long time. The market has been falling for a long time. The sellers are getting tired, they're getting weak. They need they need to catch a breath, kind of. So now they relax for some time. The buyers will take over, the sellers, the buyers, and that way then the sellers would continue with that selling pressure. Then the selling pressure continues, gets stronger. So then it breaks this ranging pattern and continues to the downside. So that's for the bearish symmetrical triangle. Now the bullish symmetrical triangle is the direct opposite of this. I won't spend time explaining this. It's just the direct opposite of this. The bullish symmetrical triangle now has the market coming from the downside. It has the market coming from the downside, something like this. Then it starts ranging for some time, and then it breaks out of this range, out of this resistance line. It retests back to a certain level and continues its pattern to the upside. So this is the bullish symmetrical triangle. This is the bullish symmetrical triangle. Bullish symmetrical triangle. Bullish symmetrical triangle. It is also a continuation pattern. It is also a continuation pattern. What do I mean by continuation pattern again? It's coming from the downside, it's going up, it ranges for some time. Here, the buyers get tired, they relax for some time, the sellers took over, the buyers, the sellers, and suddenly the buying pressure increases to the upside. So it was actually buying before it started ranging in a symmetrical pattern. Then it breaks out of that line, it retests and continues its move to the upside. So that is that for the bullish symmetrical triangle. Please, if you have any question at any time, you can always unmute yourself and ask if I go too far. Okay, so the next pattern on my list is the ascending triangle. We just looked at a symmetrical triangle. Now we want to look at the ascending triangle. The ascending triangle is just similar to the symmetrical triangle, but it does not have all its sides being equal. It forms something like this pattern. It forms something like this pattern. If you remember, the symmetrical triangle forms like one of its sides is at an angle to the horizontal, but this one has a flat horizontal resistance, but the other has a kind of diagonal resistance. So that is just the difference. They are still the same thing, still the same pattern. This is also a continuation pattern, and it acts the same way as the symmetrical triangle. It acts the same way as the symmetrical triangle. Sorry about that, network issues. I'm sharing my screen now. Okay, so I was talking about the symmetrical triangle. It acts just the same way as I was talking about the rising triangle rather. It acts just the same way as the symmetrical triangle. Then suddenly the buying pressure continues. You know, it was coming from the downside, so it was buying, but it started ranging for some time. Then the buyers got tired, the sellers took over for some time, and then buy, sell, it kept ranging for some time, and suddenly it's broke the resistance at this point. So what are we watching out for in a rising triangle? We're watching out for a break in the horizontal support, in the horizontal resistance rather, and it continues to the upside. Don't worry, I'll teach us entries so you'd understand how to enter any of this type of trade. This is just the pattern. Now we're learning the pattern. Soon we'll be learning the entry, how to enter on, I believe I've even taught to some extent on that, how to enter on a support line, the candles you should watch out for. There are certain candles you should watch out for at a resistance or a support zone. So now this is a support zone. When it breaks out of this line, I would teach us how to recognize an actual breakout and a fake breakout. For a fake breakout, it is most likely to form just wicks above, and the body might not really close above. It will break out forming wicks, more of wicks above. And even if it breaks out, you should wait for a retracement before picking your trade. You don't just jump into the trade just like that at any breakout at all, any pattern, any strategy or whatsoever. When it breaks out of certain, except some exceptions which I might be mentioning, but for patterns like this, you should wait for a breakout and a retest. That is one of the surest trade, a breakout and a retest. And when you watch this, it's just similar to when you have what's it called now? Like, this is similar to having an uptrend kind of for a rising triangle. It's kind of similar to having an uptrend. But you have highs now. You're not having higher high for some time, but you'd keep having higher lows, but a constant high. And after some time, it breaks that constant high and goes up, then retraces back to almost that level. I would teach us how to know the level to which the market would retrace in Fibonacci. When I'm talking about Fibonacci, I would be telling us how to know the level to which a market would likely retrace and how you'd be sure it is retracing at that level. We'll be using our Fibonacci tool to talk about that. So on this line, for instance, you should be expecting it to form something like a hammer, a tweezer's bottom, a morning star. If you see a doji, if you see like an evening star popping up here, you should not expect to jump into a buying market, because an evening star does not symbolize a rise in market. If you see a hanging man around here, you are not expected to enter the trade. Just like the picture I showed us on the group the other time. A hanging man was coming up somewhere in a downtrend. You should not expect markets to reverse at that level, because the hanging man there is just a normal, like every other normal candle. It is invalid at that region. So when you see a hammer here, you know it is valid. But when you see a hanging man around here, you should know it is invalid. So what are we watching out for in this region? First, we're looking at the support level, the breakout and retest. We'll be using our Fibonacci to calculate the level to which it is retracing to. And now we're expecting to see certain types of candles like the tweezer's bottom, the hammer, the morning star, the doji, and then you can place your buy here and probably place your stop loss somewhere around here, and your take profits should be the highest. Your take profit should be the horizontal level from this point where it started ranging to the highest level here. This is what I mean. Your take profit should be the horizontal level from this point to this point. For every, just this, the same thing here applies to the symmetrical triangle. The same thing here applies to the symmetrical triangle. Your highest horizontal point in the pattern should be your take profit. Sorry about that, network issues again. I hope you can still see my screen. I hope you can still see my screen. So the highest horizontal level here should symbolize your take profits. I'll be changing this to green. So see what I'm talking about. So understand the line I'm talking about. Okay. This green line now should be your take profit. So you just measure the horizontal distance here and bring it here from your point of entry and bring it here. So now you're expecting your take profit should be around here. So you're expecting to place your take profit somewhere around here. Somewhere around here. So how do you now place your stop loss? Your stop loss would be the shortest leg, the shortest horizontal distance from here to this point. So now this would be your stop loss. You measure this and you bring it here. Let me change the color so we don't get confused. This. Let me use something like pink. Yeah. So the green level, the green point here should be your TP, and this point should be your stop loss. And this point here should be your stop loss. This level here should be your stop loss. The level here should be your take profit. You can see what you're risking is way smaller compared to what you want to gain. This is like a ratio of 1 to 3, if I'm not mistaken. From here to here is like 1. Then here to here is like 1 of your stop loss, 2 of your stop loss, and 3. So you're risking like 1 to get 3. You're risking like $5 to get 15, like 10 to get 30. And that's sorry about that again. So that is that for an ascending triangle. The exact opposites. I would not be going this. I'll not be going in depth again for the falling triangle or the descending triangle, because it is just the direct opposite of the ascending triangle. It is just the direct opposite for the ascending triangle. So now we have the descending triangle in this manner. This is also a continuation pattern where we have the market coming from the upside. The market coming from the upside, and then it ranges. And then what are we watching out for? A breakout out of this zone. Now we're watching out for a breakout and retest of this zone. Retest back to this zone and then to the downside. So now how do we measure our take profit? Our take profit will be the highest horizontal distance from this point down to this side. This is what I mean. From here to this point. The same thing applies to the symmetrical triangle. This would be our take profits. Then stop loss is the shortest leg from here. Yeah. In fact, this is the shortest leg, kind of. So now you just measure this, then you come and put it here from your point of entry. So I've changed the color of this to red. To symbolize stop loss. and you measured. After measuring that, you just bring it here. So this now symbolizes your take profit. So that will be all for the descending triangle. We have a lot to do. I did not want to use the trading view. It would have been faster. I want us to get used to the MT5 first. I want us to get used to the MT5. Because very soon I would be introducing something on MT5. I'll be introducing an indicator on MT5. So you have to get used to the platform a little to maximize the use. This meeting will be ending shortly. Let's see if we can take one more pattern before then. Due to my exams, I might not be able to hold long classes for 2 hours anymore. So the next is the head and shoulder. I guess it would be best to use TradingView to explain the head and shoulder. It would be best to use TradingView to explain the head and shoulder. I would try seeing if we can have a class tomorrow just to cover up for today, because this class is very, very short. I know. We can have a class tomorrow just to cover up for today. So I would see to that. So we'll be using TradingView tomorrow, or probably the PDF, so it will be very, very fast. So do we have any question? Brother, do you have any question?
No, sir. Following. No question
Okay, sir.
understood.
All right, sir. Thank you very much, sir. So we'll be having class tomorrow at the same time.
Okay.
Yes, sir. So just to cover up for today, we'll be having class tomorrow because this class is really short because I have to still cover up for some things tonight. So we'll continue tomorrow, sir, and we'll be using TradingView to make it fast. All right, sir. So we'll call it a class from here. Thank you for attending. And thank you for sparing your time.
Okay, sir.